Welcome back to the Humble Market Timer YouTube channel. If you like the content, please remember to hit the like button, comment, and subscribe. Now today I'm talking about when the stock market bottoms and reverses. What generally causes it to occur? Now I've put this first image up of the S&P 500, and I'll dig a little bit deeper in another video regarding what this chart is telling us about the future of the stock market. But for now, I want to focus on what happened in 2008 and 2020. You can see here on this chart of the S&P 500, we had a bottom back in 2008 and a bottom back in 2020. The 2008 bottom occurred during the famed or infamous financial crisis of 2008. And then, of course, as many of you probably still remember, back in 2020, we had the COVID lows. Now, in both instances, there were reversals that occurred at the bottom due to specific action done by the Fed to boost investor confidence and stabilize the economy. We'll talk about those things as well as what other events that could occur in the future that might cause the stock market to pivot from the current weakness that we've been showing in the last couple of weeks. As you can see here, we've had a pretty sharp downturn from the highs. Now, the last couple of days, we've had some bounce back days, but that was to be expected. But I do not believe that will be sustained, and I think we'll have another leg lower before we have a serious bounce. So again, what news events would likely spark a reversal in this recent stock market downturn? I have some things outlined. I think, or that typically, these are the things that will bottom markets. And these are things that you should be looking for as an investor to see, okay, now we have this occurring. I may start to need to look to try to buy in at these low points to time the market to maximize my profits. First, let's look at policy shifts. Anytime there's a disruption or change in what was previously done, particularly in global policy, anything that may have to do with importing or exporting, or that may involve the interaction of multiple countries, generally, if there's a shift of policy with those global policies, there typically is a serious problem that's occurring. And usually, unless there's some universal agreement or there's some structure that's created where all parties are happy with what is going on, or whatever type of change that has occurred, there's going to be angst in the markets. So you have to look for shifts in policy to possibly determine where there could be a reversal that could occur in the markets. Next, you could have a major world event. And when you talk about major world events, it could be something like a war, it could be viruses, or anything that can upset global markets. Any resolutions or solutions can ease any kind of market tensions and reverse the sentiment. Next, you have unexpected positive economic data. If the economy all of a sudden is starting to trend negatively, but then all of a sudden you have a positive trend that comes up in a lot of economic data that gets reported weekly or monthly, those things too can cause a reversal. Next, you have valuation corrections. the stock market has been on a meteoric rise in the last several years. And when that occurs, you often can get stocks or companies that are overvalued. You could have a company that may have, say, $1 billion in revenue, but yet it has a $200 billion market cap. It just doesn't make any sense. And in order for there to be, for things to kind of get back to normal, there has to be a drop in the stock market for valuations to become normalized and for it to make sense for buyers to want to jump back in and get involved in those companies. And last, you have central bank intervention, which is what occurred back in 2008 and in 2020. You had the central banks come in and inject a bunch of money to create a structure and an economy where there was actually some belief in that things weren't going down to the very bottom. So when the Fed jumps in and boosts the economy, that type of event can cause a sea change in the market. So now I'm going to give you 3 things that I think hypothetically can occur that can cause the current slide we have in the market to all of a sudden reverse. First, Trump comes to an agreement with Canada, Mexico, and China regarding tariffs. Right now, that is what has caused all of a sudden for the stock market to drop. We don't know what the result of these tariffs is going to be. There can be some very negative effects with these tariffs. It can cause inflation. It's causing unrest and problems with other countries that we were allies with. However, if at some point we could come to some resolution agreement with those countries, that would be enough to reverse the sentiment and create some level of calmness in the markets. The next hypothetical thing would be, or hypothetical event would be if Trump were to negotiate a ceasefire between Russia and Ukraine. Again, anytime there's war, particularly involving a major power like Russia, that can upset global markets. And if at some point those two entities can come together and there's a ceasefire, that also can cause global markets to calm, and that could result in a reversal in the markets. Last, I think you could have a low consumer price index print. All consumer price index represents is inflation. And there's a fear, particularly with these tariffs that are being implemented, that inflation will get out of control, get too high. And when inflation is high, then the federal government or the Fed can't come in and intervene and inflate the economy by pouring in liquidity to get the economy back on a level flooring. So anytime there's a situation where we have a lower consumer price index print, where inflation is lower than what is anticipated, that gives the Fed the green light to then come in and then inject that liquidity into the market to get it pumped back up so we can reverse that trend of negative downside. Now, in future videos, and probably this week, I'm going to point more so to individual stocks and where I think some price points will be in the coming weeks and months, to where I think maybe potential good spots to get in to really maximize your profits. But I wanted to put this video out there to kind of give you some things to look for in what can eventually change the sentiment and the direction that the stock market's flowing. Thanks for listening to this video. Again, if you liked the video, please like, comment, and subscribe. Thanks again.